Hello and welcome back to a new video about the latest Tesla-related news. We're starting off with a CNBC interview about the future of Tesla compared to the traditional car manufacturers like General Motors and Ford.
So if you take a look at the way that it stacks up to those guys, what exactly then does that say about the future for Tesla versus a GM or a Ford or a Volkswagen who have grand EV ambitions of their own?
I think all of the OEMs, the major manufacturers, are actually doing pretty well. And we can talk about a 62, we can talk about 69, 65, where a lot of the major manufacturers are congregating ratings-wise. And those are low-risk ratings. Over 90% of companies that have failed in the last 20 years have been rated 40 and below. So the companies that are rated 60 are actually really quite strong.
I wouldn't quite describe GM and Ford as strong companies as they currently have collapsing ICE vehicle sales, which will never return to their previous highs. And at the same time, they are struggling to ramp up their EV efforts. But hey, time will tell.
What Tesla has that others don't is the ability to experiment with things like pricing, and you're seeing that now. And that's a way to capture market share at a time when many people are afraid to buy new cars because they've become so expensive. So you've got a perfect storm in autos, like a lot of other industries, where you've got high inflation, you've got recessionary concerns, you've got the move to EV, which can provide even more costs and embed more costs, and you've got supply chain challenges. So all of those kind of wrapped together, and Tesla's in good shape.
It's fascinating that basically your analysis suggests Tesla's price cuts come from a position of strength and not desperation, and that's obviously been, an argument point in the market.
Tesla's price cuts are definitely come from a position of strength. They have told us many times before, and it's even in their master plan. They will continue to bring their prices down to be able to serve a way bigger audience, and they are the only ones being able to do this as well. At the same time, other EV manufacturers are drowning in huge losses per vehicle, but more on that later in the video.
It's also, we watch the shares, for instance, AutoZone, and AutoZone, has bought back like 85% of the float. It's crazy. But are those auto parts retailers, you think, in fundamentally good health? Are they continuing to benefit from some of the pandemic tailwinds or not? Are they more of a financial engineering play?
Well, no, I think they're fundamentally reasonably strong. AutoZone's rated a 64, O'Reilly's is rated a 68. These are good ratings. And a lot of that comes from, again, the consumer factors. People are trying to buy fewer new cars, perhaps, holding on to cars a little bit longer, and in doing so, they're buying more parts. So those are fundamentally reasonably strong companies because of that factor.
Is that a longer-term trend, people taking care of their cars longer? And if so, does the EV aspect, I asked this out of a position of experience. I literally have an '05 Infiniti with 218,000 miles on it. I've been paying for the upkeep. It's costing me more now. But can you do the same with EVs that you can with my internal combustion engine vehicle?
Now, this is one of the many positives about electric vehicles. They have less parts, so less things can break. Of course, as this is a relatively new technology, there might be some teething issues, but in general, the total cost of owning an EV is much less than an ICE vehicle. And the maintenance cost plays a big role in this. As Elon always says, the best process is no process.
I'm worried you're not driving your car hard enough, but definitely. We don't know yet what the lifespan is on parts for EVs. We just haven't gone through enough cycles. But without question, there's a big push, and every manufacturer is pushing more for EVs, which is creating more supply chain issues, but it's also creating more demand and education of the consumer base. Not everyone's prepared to go there yet, and I think that's one of the reasons. They don't know how much flexibility they're going to have with their vehicle.
Next up, let's have a look at one of Tesla's competitors in the EV space. Lucid reported a lower than expected first quarter revenue just yesterday. Not only that, they once again lowered their 2023 production forecast, which they blame on the price war sparked by Tesla, rising interest rates, and recession fears. Lucid has largely avoided lowering prices on the Air luxury sedan that starts at $87,400, and instead announced a restructuring plan to lay off 18% of its workforce, or about 1,300 employees across the organization, to rein in costs. They reported quarterly revenue of just below $150 million, while the average estimate was around $210 million. That's a serious miss. And while Lucid is already struggling to sell cars because of Tesla, their competitive prices, Tesla is, you guessed it, once again making some seriously smart moves to be able to bring down their costs even more in the future. As Tesla breaks ground on their first lithium refinery, which was live-streamed on the official Tesla channel, they explained the importance of this investment, and it's a big deal. Elon Musk, along with Drew Baglino, gave a brief presentation about the plans on building a huge lithium refinery just outside Corpus Christi, Texas. The goal of the new plant is to produce lithium hydroxide to support its own battery cell production at Gigafactory Texas in Austin. Elon said the factory would be able to produce enough battery-grade lithium to make about 1 million electric cars per year. This once again shows the importance of massive scale, as explained in Master Plan Part 3. They are aiming to finish construction of the factory next year and then reach full production about a year later. I personally can't wait how this develops. Tesla has so much going on, it's super exciting to follow their progress. That's all the news for today. I hope you enjoyed the video. I'd appreciate if you could leave a like. And if you're interested in future videos, make sure to subscribe as well. Have a great day. Until the next one.